Have you ever stopped to think about what a company really is? What if I told you there's this incredible legal invention, almost like a secret code, that you deal with every single day? It's the invisible engine powering just about every business on the planet, and it's called the corporate personality. So here's what we're going to cover. We'll kick things off with the huge, high-stakes problem that every single business owner faces. Then we'll get into the brilliant legal superpower that was invented to solve it. We'll see how that shield actually works, and we'll even look at the very rare times it can be broken. And finally, we'll tie it all together and see why this one idea is basically the engine of our entire modern economy.
Okay, so to really get why companies even exist, you gotta start with the basics. Just one person, an idea, and a whole lot of risk.
I mean, just picture it. You have this amazing idea for a business. You go all in. You quit your job. You pour your heart, your soul, everything into it. But what if it doesn't work out? What if it all goes south and you're left with a mountain of debt? That question, that fear, well, that's the entrepreneur's dilemma in a nutshell.
Let's put some real numbers on this. Imagine your business ends up owing £70,000. If you're operating as a sole trader, the law sees zero difference between you and your business. That's 70 grand. It's your debt. Creditors can come after your savings, your car, even your home. But if you're a shareholder in a company, that debt belongs to the company, not to you. Your personal stuff is safe. The difference is absolutely night and day.
So how did we go from that personal nightmare scenario to being a protected entrepreneur? Well, the answer isn't better insurance or some clever accounting trick. It was a completely revolutionary legal invention.
And this right here is the crucial point. The company isn't just some stuffy, formal business structure. You should think of it more like a piece of legal technology, a kind of superpower that was designed to solve the exact problem we just talked about. It completely changes the game when it comes to risk. And here it is. This is that superpower. It's called separate legal personality. Now, the idea itself is pretty simple, but it is so profound. Basically, the law agrees to pretend that a registered company is its own person. It gets born when it's registered, it can live its life, and it can even die through liquidation, all completely separate from the actual people who own it.
And this is not some new idea, by the way. This concept was locked into law way back in 1897. Because it's a legal person, a huge company, like an Apple or a Google, can own entire buildings, sign billion-dollar contracts, and even sue other companies, all without ever touching the personal legal status of its millions of shareholders.
Okay, so if a company is its own separate legal person, how does that actually protect the entrepreneur? Well, this is where we get to the shield itself. Right, just think it through. If the company is its own person, it just makes sense that the company is responsible for its own debts, doesn't it? This effect is called limited liability, and it means exactly what it sounds like. Your liability, your financial risk, is limited. The absolute most you can lose is whatever you invested. It's the direct, powerful consequence of that legal superpower we've been talking about.
And when you put the two side by side, the differences are just stark. We've already covered the big one, liability shifting from unlimited to limited. But here's another really fascinating advantage: continuity. A sole trader's business basically dies when they do. A company, on the other hand, can theoretically live forever, just passed from one set of owners to the next. This is called perpetual succession. Now, of course, not all companies are the same. The huge majority of them are private companies, or LTDs. They're simpler and have fewer regulations, but if you want to raise a lot of money by selling shares to the public, you have to become a public limited company, or a PLC. That gives you access to way more capital, but it also comes with much heavier rules, and you need at least £50,000 in capital just to get started.
So we have this powerful legal shield. It seems almost unbreakable, right? But what if it's used for the wrong reasons? What if someone tries to hide behind it to do something they shouldn't be doing? You'll often hear lawyers use this great metaphor. They talk about a corporate veil or a wall of incorporation. And it's the perfect image for this legal separation we've been talking about. It's a barrier that protects the owners from the company's liabilities, which naturally leads to the most dramatic question in all of corporate law. Can a court ever reach through that wall, or pierce the corporate veil, as they call it, and hold the owners personally responsible? The answer is yes, but only in very, very extreme circumstances. So when would this ever happen?
Well, the courts just won't let the company be used as a smokescreen for fraud. For example, if you set up a company specifically to get out of a legal duty you already had, or if you keep taking on debt knowing there's no possible way the company can pay it back, a court might just step in and say, nope, this shield doesn't protect you.
But, and I really have to stress this is the exception, not the rule. The courts are fiercely protective of this separate personality principle. Piercing the veil is a last resort, really reserved only for the absolute worst cases of abuse. For the vast, vast majority of legitimate businesses, that shield holds strong.
Okay, so let's zoom all the way out. We've gone from a single entrepreneur's fear all the way to some pretty complex legal ideas. Why does any of this abstract stuff matter so much in the real world?
Well, think about it. Without limited liability, would anyone really risk their life savings on a world-changing startup? Would the stock market even exist? By putting a cap on the financial downside for investors, this legal concept is what unleashes the economic upside for everybody. It is the engine that fuels all the risk-taking behind innovation and growth.
But this protection isn't a free lunch. There's a trade-off. In exchange for the privilege of having limited risk, companies agree to pay a price, more regulation and less privacy. They have to file their financial accounts publicly so everyone, creditors, customers, competitors, can see what's going on. It's a bargain, really. You get protection, we get transparency.
And that leaves us with one final thought. We've seen that this legal shield is absolutely essential. It protects innovators and it fuels our economy. But it also allows for these immense accumulations of wealth and power to hide behind a corporate name. So the question we, as a society, always have to ask is this: how do we balance the need for that protection with the responsibilities that have to come with such a powerful privilege?